Okay, we're live, right. Welcome back, guys, to another weekly Outlook video. Now, these videos we put out every single Sunday just to give you a little bit more detail on the chart markups that we give out on our TradingView. Now, first thing we want to say is thank you to everyone that helped us get to the 500 follower mark on TradingView. Pretty big milestone for myself, if I don't say so. And if you're not already following, then hit that follow button. Now, we've had some amazing feedback from the Keep It Simple series. So if you haven't watched that, head over to the Keep It Simple series and give it a watch. Remember, a little comment and a like goes a long way, so really appreciate that. What we're going to be doing today is we're going to be looking at the markups. As I've explained before, we're going to be looking at gold and euro, the same markups we give out every single week. So starting things off, we're going to look at last week's markups. One being gold and the other being euro. Now we're going to start with euro instead of starting with gold. And you can see here that from the euro US dollar last week, we had an idea that price action may want to sweep our major high. We had a target for the major low, but the points we were mainly referencing were the liquid high that was placed in the middle of the range, and then the area of supply that was left unmitigated. Now, you can see we have a couple of different movement points here, one of them being this liquid high being swept, and then price to continue running lower or reach higher up to the next liquid high. Now, when we play this, you'll see that we actually didn't contact any of these, and we just hit our target immediately and continue to run bearish. Now, this is part of following the trend in the correct direction, because a pullback is never guaranteed. The only thing that is guaranteed in a trend is the expansion. So the expansion in this case was the only thing that was delivered. So following over onto this week's markup, you can see that we're looking at the same thing. The narrative is the same. We're looking for that continuation in downside. We're also looking at the internal liquidity that we have stored and the highest points of external liquidity, as well as the point of supply that has been left unmitigated. Now, as we stay in the text work down here, this is a daily high to the left, sorry, a daily low to the left that was swept out. So we know that that holds a significant amount of liquidity, and we actually talk about this and explain this in more detail in our latest video, which is keep it simple, counter trend. So that again will explain the premise of what we're looking at here. Now, we know that this offers potentially a movement back into the areas above. Now, of course, this would be a pullback move, but we know the principles that are sitting in price action right now give us potential for bullish movements. Now, we know that we're looking for bearish and we expect price to continue going bearish. So we have targets set for the lows, one being a major low to the left, one being a short-term low, and then of course the rest of them are points to look to sell price from. When we play this, you can see price is looking to follow that initial move up, which goes in line with what we were saying about the daily low being swept. So as it stands, look for the liquid high and the area of supply to be contacted. If they are contacted, look for an entry down there. If you don't know how to take an entry based off of the money in, money out principle, then you can learn that, of course, in the Keep It Simple series. Now, heading over to the gold markup we gave out last week, notice how there's a kind of pattern you're seeing here. We have a range, we have points of liquidity within that range, we have a major point of supply as well above the high, but we'd already contacted this short-term area of supply right here, which could, and in fact often does, provide enough liquidity for price to continue going down and take out the lows. And you can see that again, we said that we were bearish on this. We were looking to continue following this down, and we'll play this here and you'll see that we actually sold immediately off of the area of supply. So the main move that we had focused, which was the down move, came in beautifully. So following over again into the same principle we have, because our bias has not changed, we're looking for something similar. Now, the only difference is we have potential for a pullback here for one reason, and that reason being we have swept the major liquidity off the daily low. So again, as we spoke about on the Euro chart, this gives potential for price action to retrace to other areas of liquid. Remember, it's all about transferring liquidity from one point to another point. this is the way that we follow the market movements, and this is how we expect price to move. So we have the internal liquidity right here. We have a marked area of unmitigated supply, as well as two major highs above that. So we're looking for this to be swept and carry price down, or price to push up into these areas. It's almost identical to the euro chart, to be honest. And when we play this right here, you can see we're actually pushing right up into these areas now. So the movement that we called from here, which is pushing price up into this, is the one that's playing out. Now, again, we're not going to go long off of this just because we've had a sweep of a daily low. It doesn't mean we're going to change our bias. No, it means we have a short-term understanding that price may go against our pre-established bias, which will take us to a point that is better for us to sell from, which is what we're looking at price doing now. So again, guys, if you haven't already followed me on TradingView, then I highly recommend you doing that, as you're going to get these markups as soon as I drop them, as well as the text to go along with it. And you can, of course, look back through previous and see that we have consistently delivered a bias which is correct across generally a higher time frame. So if you have enjoyed this video, guys, make sure you hit that like button, make sure you drop us a comment, and of course I will see you in the live stream which is taking place later on today. Peace and love, guys, and I'll see you all in the next one.